Hello, good afternoon. My name is Andeerson Wong. Today I'd like to talk about the dollar index. Why I need to talk about dollar index today? Because I see a lot of people do ask me about the volatility in the market, and most of the volatility in the market is related to dollar index. A lot of people are not sure what is dollar index about. Dollar index is a measurement of the US dollar currency strength, either they are weak or low. They can go, let's say take from a chart from last year November. The price can go from 94 index point to up to 97 index point, even though the flotation about 5% of the dollar index, 94 to 97, about 4 point, but the effect on the market is very huge. So that is why sometimes you can see the chart is moving. Suddenly it goes sideways, and suddenly out sudden you move up about 60 pips or 80 pips. So all of this is because of the fluctuations in dollar index market or dollar market. So this dollar market will affect all the currency like euro, Japanese yen, Aussie dollar, British pound, and so and so forth. So this is a key to understand how to handle the dollar index and what pair is affecting by dollar index. The purpose of this video is to let you understand the market is no more the same prior to November 2018. 2018 and before, you can see the dollar market or dollar pair market is not fluctuating so much, and not suddenly it move 60 pip, 100 pip, or even more than 100 pips in single move. So this is how we can see dollar index is a key to understand. It's a very important key to understand. If you can read the dollar index properly, understand the dollar market movement and the strategy, you can better equip to handle all the pair that are related to dollar index like Euro USD. You can see currently for the last 2 months, now it's April, from after Chinese New Year onward, you can see suddenly they go sideways all the time, but suddenly they move up or move down 60 to 100 pip. This is give a lot of people a heart attack. So I urge everybody look at the dollar index again and read the movement. So this will benefit you, and so you have less heart attack and can handle the market better. Okay, so another purpose is you can choose a pair that not so much affected by dollar index. Okay, so in my course I will tell a lot of people how to do that in my scalping course as well as position course. So this is later we move to the screen and we can see how we can handle the market better. Thank you. Hello ladies and gentlemen, now we go back to understand the dollar index chart. This is H4 dollar index chart, and this is from last year November 7. You can see after November 7 there's a lot of volatility. What I mean by that, all right, take a look. So before that there's a volatility as well, you can see, but not much compared to after this cutoff. This is still a moving for dollar index, all up all the time, retrace, up all the time, retrace. But here is a little bit different. The movement, there's no direction on dollar index market. All right, it go up, come down, but this is the starting point. This is a warm-up period. This is a starting point. You see, it gap up, gap down so much. How much? Let us take a look. This is 97.37, move to 96 point, about 0.4. 0.4 point in dollar index is considered huge, volatile. So this is a warm-up period. So on January onward, you can see the market is volatile. So we zoom into H1 and we take a serious look. All right, take a look. This is dollar index market on March. It moved off, it's sideways the whole day. This is March 5 and March 6, March 16. Suddenly it dropped so much, so fast. All right, then it goes sideways again, drop again, so fast, but it bounced back tomorrow. But on the same day, it will scare you out. This is how good the market maker. That is why I teach price movement analysis and market maker psychology. What's the meaning of this? You must understand. It go up and come down to do a trace and go up again. So you can see one sharp movement, second sharp movement, third sharp movement, and this is a little bit stable. Yeah, stable. This is again happen, again happen, again happen, again happen, again happen, happen again, happen again. This is the what we cannot handle previously, and now more and more difficult to handle dollar index. So how it relate to your Euro USD? Take a look. This is your H1. All right. So we go back to March as well. So we take a H4. H4 you can see same thing. That is what I mean. It moved sideways. Sharp fall, one sharp movement, second, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. This is a big one, very big. Yeah, as big as this. You can see the line 14, 15, 16, 17, 18, 19, 20, 21, and so forth, 22. So this is how the dollar index affect the financial market, especially for this pair Euro USD, because that's why I keep on saying the dollar index is a must understands tools for forex trader if you trade related to dollar pair. So dollar index is a key component in your trading strategy. If you don't understand dollar index, then your dollar index effect that affect your currency pair like dollar Euro USD, you will suffer a lot. All right. So let us go back to take a look on H4. How about H1? This is the example. Let us take a look. You do a sell here, example, and suddenly it go up. 1 day, 2 day, 3 day, 4 day, 5 day, 6 day. This 6 day you will suffer a floating loss. You don't know you come down, all right? So these 6 days you suffer a lot of emotional effect. You suffer from don't have much confidence because you sell over here and this is a floating loss. If your account is sustainable, then you are all right. But your account is not sustainable and the floating loss keep on increase and your margin call is there. You only have few solutions. Either you cut loss, either you add in more margin, more deposits, and hold the shorts. But this is not a good trade, right? So if you move in further to M15 or M30, how to handle this? How to handle this, right? This is Euro USD based on M15, and currently it's moving up here. So what is the intention on the market today or this coming week is moving upward, but there's not much directions. Not much direction. It was go back to 1.1250 level, but suffer will be maintained over there, and from there they will find a new directions 1.1250. All right. So the problem that with dollar index is how a lot of traders can handle this movement. It go up, go up, go up, suddenly pump, come down so much. The falling is about 76 pip. 76 pip is big movement in financial market, especially Euro USD. That's why dollar index is a key component to understand. All right. So I would like to tell everybody patience and making a good move to your dollar index, especially for the import-export company. Dollar index is a must look chart because it affects the strength of the dollar and it directly affects the strength of the ringgit. All right. So if the dollar getting stronger, the Malaysia ringgit can be moving from 4.1213 to 4.161718 or maybe 4.20, depend on how strong the dollar is moving forward. This is how a lot of corporate, they don't understand the dollar index and how to read the dollar index properly, and that is why they cannot understand how to manage their foreign currency gain and loss. So in my course for company, we call basic class for corporate, there is a class in Kuala Lumpur. I will carry out the class for public one or two one time one class every 2 months or something like that based on the demand. But most of the company is asking me to go to their company to give a lecture or course to teach them how to understand this dollar index as well as handling of Malaysia ringgit, so they can save a lot of money in foreign exchange gain and loss. Thank you and have a nice day.